Okay, welcome back, everybody. We are going to be doing chapter 3 today, and as you can see, the title of chapter 3 is Additional Customer Transactions. So, again, we learned yesterday how to add a customer, how to um, how to create a sales receipt as well as an invoice, right? What to do with your customers, right? The purpose of doing customers is to look at the sales process, right? And then now this is looking at additional customer things. So this is where I said that where chapter 2, customers is a big part of the purpose of having a business, right? You want to have your customers. And it's broken up to two different chapters. So we have chapter 2 and chapter 3. Now in chapter 3, we're going to learn about how to do customer credits, customer dealing with customer returns and dealing with customer credits. Okay, so that's going to be very interesting. Second thing that we're going to be diving into is, well, what if a customer doesn't pay us? Okay, and therefore since how do we write off bad debt expense? And I'm going to teach you two different ways. Okay, and it's going to look very familiar because we've dealt with bad debt expense before. Right? Then we're going to be looking at how to create customer statements. So, just like any regular credit card company, right? You released statements on basically a list of all the transactions that occurred between you and this customer. This is the same exact thing. You setting an invoice, all right? It gives you the bill, the current bill. A statement, right? Just like a credit card statement, a bank statement, you're going to get a list of all the transactions and your current balance that you owe. Now, oftentimes that does happen when you open up your credit card bill, right? The first thing that you see is a list of all of the transactions that happen and what your current balance is. So this is the same thing. We get to create our customer statements and be able to send them out to our customers to let them know what their track record is, and of course to give them a friendly reminder that this is the amount they owe, so please pay. Okay. So two more things I want to be looking at is going to be collecting sales tax. Now this one is going to be quite interesting, learning how to collect sales tax. And then lastly, we're going to be looking at how to create our sales report / customer reports. Okay. So those are the only topics that we're going to be looking at. So I mean, from my past experience, chapter 3 was kind of actually lengthy in a sense of explaining. But if we do get to go through it quickly, I do want to go back to chapter 2 and be able to do one of the problems. So we'd be able to look at how to enter in another customer and how to create other things. Okay, so let's get started. I've already done the part where I've opened up the file for you. So we're looking up at our customers files. Okay, so it's ready to go. So let's go ahead and read the first section here and see what we're dealing with first. Okay, so we're going to be dealing with recording customer returns and credits. Now, here there are 4 reasons why you need to do this kind of thing, right? 1, if a customer decides to cancel their order, you know how to cancel it, okay? Second thing is, what if they return within, obviously, the return policy, right? What if they return a product to you? What do you do there? And then we're going to look at the 3 options that you can offer. You can either offer as 1 to apply it to their invoice so they owe you less. 3, you ship back the money. 2, you ship back the money. Or 3, you leave it as a future credit for them to use for for a future purchase that they may encounter. So again, that's very similar to how if you go to a regular mall shopping store, right? Sometimes they'll provide you store credit. They don't refund you the money right away. They give you either those kind of options. Okay? So, and then we're gonna also be recording a credit on account or a for a customer. So again, that does go along the line with okay, if I made a deal with them, then I give them the credit. And then lastly, if they overpay, for the amount, let's say they forgot that they met the discount period and they overpaid or they decided to send us the wrong check, whatever, wrong invoice, or they paid for the wrong invoice, things like that. If they paid over the amount, then we have the option. Well, you can either have us send you a check to refund you the money that you overpaid for. We can apply it for the next invoice, or you can have it as a credit, a credit. All right. So here we're going to be looking here. We're going to start looking at how to refund a customer. Okay, so we're going to look at that first. And we're going to be introducing to you guys what's called credit memos. Okay, so for this example here, we're going to look at Mr. Bob Mason, and we're going to be looking at his invoice number 3947. Okay, so where can I pull up Mr. Bob Mason and where can I pull up his invoice?
On your customer icon, on the menu bar. I'm sorry.
Okay, menu bar?
Yeah, well, it's one of the
icon.
right.
Or the
Ye-
icon bar.
Right.
Okay.
Bar. Under customers in the icon bar.
Under customers on the icon bar. Customers. Okay, so here it is. Let me stretch my window out a little more. Who am I looking for?
Mason Bob.
Mr. Bob Mason. So here he is. Okay, now how do I look up his invoice for number 3947?
From the transaction bar, you click the invoice number 3947.
Transaction bar?
Yes, from the list of transactions displayed.
Okay, how do I pull that information up if I don't? I'm currently at Bob Mason.
I wasn't looking at the screen. Let me look at the screen.
Okay,
You gotta double click on the invoice number.
where's my invoice?
Let's see. First, you pull him up.
I'm currently on him right now. I'm currently on him right now.
And then, yeah, you double click on the invoice.
Where's the invoice?
Okay, we'll go to all trans drop down.
Okay.
Okay, then let's see, invoices. You go to invoices.
I just did that.
No, it doesn't list it. Where does it list it?
Here it says, enter transaction.
All right.
Click on the invoice. This will open the invoice. It says, so the invoice is opened.
Well,
it says
that's the thing.
Filter by.
Filter by.
Okay, go down. Drop down. Maybe it'll have a list there.
Okay, you're getting warmer. Filter by what?
All invoices?
Invoice.
We got invoices.
Okay, filter by the invoice.
Okay.
So we want to do the drop down there and see if we can find that invoice number.
Yeah.
Okay. All right. Keep going. Let's keep looking down this line. What else do you see that's different? All right, so we got filters, all invoices, okay? Done.
Right underneath invoices, it's got NUM for number. So can we enter the invoice number there?
No, we cannot.
Okay, then do the drop down where you were at all invoices.
All invoices.
Okay, open invoices, overdue invoices.
All invoices.
Well, we don't want all of them, right? We just want the overdue or the open invoices.
Open invoices, nothing.
Okay, how about the overdue?
Nothing.
Okay. Then
Lee,
that's-
Lee.
Yeah,
You are in the correct direction. Now, I want you to go over one more. What do you see there? One over to the right. What does that word say?
it says this date.
Okay, and what does it say? The this fiscal year?
Fiscal year.
Yes.
Oh, we're going by the date?
Okay, so when you're filtering out your options, right, you have multiple options you can choose from. So here, I don't want to just do I'm going to do all transactions, right? If I go to the date, right, this one says this year. What year are we on?
2020.
What year is this invoice coming out of?
Oh, 2019.
Yes, so if you hit that toggle button and you scroll all the way up, you have all. And there's all his transactions for every single date, all the way up to now. So that's what I was trying to get at you. Like, how do you find this invoice? Okay. So here, invoice, what was it? Number 3947?
47,
Right here. All right. And if we double click it, here is the invoice. All right.
There you go.
Okay. All right.
Okay.
I just want to make sure that you understand how to even pull up an invoice.
Yeah, well, you would think that it would be listed under, transactions.
You were close. Just the one thing that because you're being filtered and you're filtering information, the one thing you want to make sure is go through all the filter options you have and which one makes sense to it. And right now it was on filtered this fiscal year. And we're currently on 2020. So
Okay.
all right. Now that we were defined the invoice, what are we going to be doing here? We're going to be refunding, right?
Yes.
Right?
Yep. Okay, for how many items?
Click the
10,
go ahead.
for 10 packets.
For 10 packets of paper, we're returning or we're refunding 10 packets of paper, correct?
Right.
Okay. Now,
Says-
it's going to ask you, how do you even create this credit memo? How do you refund?
There should be a refund and credit.
Where?
Should be on here. You see it in there? Okay, let's see.
Well, we have to change the date there. The date says 2018.
Yeah, so does.
For this one, it's okay. We'll just leave it as is. We're just making a refund to apply to this invoice. So the date doesn't matter because the date happened whenever. Okay. So we're just going to leave the transaction the way it is. All we're doing is just refunding for the 10 packets of paper.
Okay, well, we have to do a credit
Mm-hmm.
memo.
All right. If we go up to the top bar right here, it says refund and / credit.
Credit, right.
Right.
All right. When we tap that, what do we see pop up?
Credit memo.
Credit memo. Right?
Yes.
Yes. Now, of course, we can adjust this. We're not doing it a year later, so I'm going to assume what date does it say that
2/15, 2019.
2/15, so February 15. And I'm just going to keep it at 2020 because I don't actually let me see if we can go all the way back. So February, 2018. February 2019 on the 15th. Okay? All right. And how many items are we returning or refunding?
10.
10. So we need to come here and we're going to change the quantity. 10. All right. Now, what happens when you, what do you have to do that is very crucial when it comes to giving a credit memo? What do you have to put in the credit memo number? Like, what kind of reference do you need to have to make sure that this is the correct
Yeah,
invoice?
the invoice number, yeah,
With the
enter
C.
the invoice number with the C at the end.
Good. So this is 3947 C. Good. All right. Make sure you validate all of this. Right here, we're going to say, oops, refund 10
paper.
pack.
Standard photo paper.
All right. Sales tax is it should automatically pull up from his previous one, and we're gonna make sure the date is correct. Good. PO number he doesn't have any, and if you notice, look at the amount. It has changed because we changed it from 30 to 10. All right. Now we're gonna go ahead and click save and close. And what's gonna happen is you're gonna get this little window here. Now, what does this window tell you?
Well, how do we want to credit?
Exactly. All right. And these are the three options that I have mentioned before. You can either have one, retain it as a credit to use for future purchases. You can either give a refund, as in write a check and send it to him for a full refund, or you can apply it to the invoice so he no longer owes you for that huge amount. It's lowered. And what does it say in the book that they want us to do?
To give a refund.
They want us to send him a check and just give him a refund. Okay, so this is assuming that he already paid for it.
Right.
Okay, now there you go. I should get this little window here telling me, okay, well, that's what happened. You're gonna send it to him, right? Are you gonna write a check for it? Because we're giving him a full refund, right? We have to prepare a check. Make sure the address is correct. Make sure the name is correct. And we're sending him a check for $133. Okay, and the date's there. Checking is for where it's going to come out of. And San Jose, perfect. So we can go ahead and click OK. And it's going to be printed. Yes. So we're going to assign the number on there.
That's so funny. So, the guy owes us so much money, but we're refunding him for the little bit that he did make a payment on.
And this is why I thought it was funny to incorporate Mr. Bob Mason, because he's just a great fellow of ours.
Yeah, that's an interesting customer.
Okay, so now that we sent out his credit memo, if you notice, we come back to our invoice. It's still going to be for the same amount because he already paid us in advance. Okay, he already paid this one and off. It says right here that it's been paid. So that means we just gave him a refund for everything else, but the receipt stays the same. Okay. Okay, so what is next? Oopsies, wrong one. There you go. Now that we've already completed our first credit memo, that is exactly how you do it. There's only I think you could be able to do a credit memo. Create a credit memo. Yes. If you right click them, you can create a credit memo doing that way. All right. But I believe those are the only. Oh, nope. You got credit memos here. So you can actually do it here. And let me see at the top. There are, yep. You have the same. Okay, except for the home page. You don't have a credit memo option on the home page. Yeah. Oh, wrong one. There you go. Do you? Let me see. You have credit. Yep. Okay, refunds and credits. So yes, you do have it
Oh,
on the
okay, so on the
homepage.
homepage, okay.
Now, remember the homepage can change depending on what you do because I don't remember this being here last time.
Way to go to, um, uh, refunds and credit.
Refunds and credits is going to be from here. For sure on the menu bar, yes, you do have it under, you go to customers and then you should have the credits, see create credit memos.
All right.
Okay. And then you have the same three ways when you go into your customer center, right? You can right click, create the credit memo there. You can do manage transactions, create the cover credit memo here. New transactions, create the credit memo here. And then obviously, if you're having an invoice, right, you can be able to do the refund and credit right here. Okay. So yes, you could do all of the ways for a credit memo. All right. So the next thing that we're going to be exploring is going to be how to write off bad debt. Now, okay, any questions in regards to credit memos as far as how to create them? So it's a pretty straightforward thing, right? Okay. What if I decide to do it like when we had in returns and allowances? Remember that?
Yeah.
What if would I be able to apply a credit memo for that?
For returns and allowances.
Yes.
Yes, you can. For example, we just gave him his full refund, right? Same thing. If you're gonna apply a discounted amount, you'd be able to do the same thing. In a sense, it's going to be similar. And if you are planning to do a discount, right, you're just going to apply a discount on it, and it's going to reflect as a, discounted amount, right, as an allowance. Okay, same steps. You're just gonna open up your invoice. So, for example, let me see if I'll be able to do it. So again, we're gonna go back into let's look at invoice 101. Let's see what Mr. Bob, or is this Mr. Bob Mason? Ooh. Nope, this is Maria Cruz, okay? Let's see what she purchased from us, okay? So she purchased an outdoor photo and this. Okay, wait, I don't want to mess with this one. So I believe this is the next portion. But let's go back to Bob Mason.
Okay.
Let's go back to Bob Mason, okay? So let's say his invoice for 3947, right? If I wanted to do, let's say, because he already got a refund, right? Let's say he's like, man, I want the special glossy paper. Oh, who's that?
Not me.
Not me.
Not me.
It's somebody.
It is somebody. Someone's knocking in.
Mine is muted.
Yeah, mine is too.
If someone's trying to call me, but I don't know who.
Oh.
All right, I have an unknown person that was attempting to try to call me. So sorry, I do apologize for that. That was just so sudden. I didn't know what to do. All right, so okay.
Bob Mason.
All right, back to Bob Mason.
Yes.
Okay, so again, if you were to apply, let's say he wants the glossy paper, not the standard photo paper, right? And we try to convince him, oh, okay, let's say he wants to do another 10, right? What we can do here is, let's say we do another returns and a credit for him, okay? But this time he wants to do a credit, or not a credit, but let's say he wants to apply for 10 more and wants an exchange, right? So what you're going to do here is, now that, see, we have it here as 10, right? And it's for the rate for $12.36, which gives us a total of 123, 60. What we can do here is we can go ahead and apply the discount, right? As long as we have the discount for the item. Oh, item. My bad. I'm in the wrong one. I'm in description. Item. So I'm going to put discount. If I do 10% discount, right? Here, it's going to automatically give him a discount off of the $223. So that means I'm going to give him a credit memo for the discounted amount. Okay? So as you can see here, right? It says here that we're charging him for the full for the 120.42. That's what we're crediting him, right? And in this case, no, that's not what we want. What we're going to do is we are going to actually take this amount, since we know it is that we're trying to refund him for the 123 and the 10%, right? We want to make sure that we are going to refund him for, instead of 10%, we're going to do 90%. Oops, I pressed entered again. My enemy. Okay, so let me go back to that and try to fix that error I just made. Go back. Oh, nope. Close this. Okay, so Bob Mason. Oh, okay. You're not closing for me. Come on. Oh, I think my window is too small. Okay. Oh, hold on. What is going on? Why can't I get rid of this credit memo and view the rest of my screen? Oh, there you go. Okay, so I'm going to exit out of this. All right, I'm going to go back to my credit memo because I pressed my enter button, which, shoot me in the foot. But here, let's go back to my credit memo here. And so here I'm working on trying to give him his $12, his 10. Ooh, this is the wrong credit memo. I want this credit memo for my 10%.
Okay.
So here it tells me that it's 90, it's going to be $36, so that's not right. I forgot how to do this. Oh my gosh. Okay, so now that I have my 10 items, right, and I want to do a 10% discount off of these items, meaning I know that my credit is going to be for 10%, right?
Mm-hmm.
Again, I pressed enter, cancel. Okay, there you go. So tab is your best friend.
Tab, right, that's what you said yesterday.
Yes, okay. So what I'm supposed to be giving back is supposed to be $10. Wait.
That's not 10%.
Yeah,
Yeah, I
10.
think 10%.
There you go. 10%. Now it's $12.30, right? And this is what we're supposed to do an allowance for, right? Now, it says here that I'm going to refund him for a total of 120.42. I don't want that. What I want to do is I want to make sure that I apply this discount and that I'm only giving him back $12.36. Now what you can do here is you can go ahead and justify here. You can clear it out and be able to do that, or you could just simply take this discount right here, okay? And you could clear it out, because what you're going to do here is you're going to actually create a, once you have an account for it, you're going to create a, what did I do? Oh.
But you got a new, now you got a new credit memo.
All right, let's go back to our previous one. Come on. There you go. So here we're going to clear out our information here. And what we're going to do is, instead of actually doing this right here, what you're going to do is you're going to create an account, and it's going to be for returns and allowances, right? And what's going to happen is, because we know that 10 items, right, is going to be for 123, we're going to take so 123.60, and we're going to multiply that by our 10%. Okay, and now it's $12.32, and now we're going to refund him for $10.32. And plus, we got to give back his tax as well. And then right here in our credit memo, we're just going to write here that we're refunding, right? Not refunding, but discounted 10% off standard paper.
Okay.
Yay, standard photo paper. Okay, and then if we go ahead, I'm gonna go.
Okay, but this is, okay, I'm sorry, but.
Go ahead.
The standard is, under the, description, it says standard and glossy. So the 10% off is on the new items that he wants to exchange for? Or,
This is because he's trying to return to us the standard glossy paper. I'm saying, okay, yeah, okay. I did say the glossy paper. He's complaining about it. Maybe the size is wrong. I don't know. Maybe it's the 5x7 when he wants the. I know. Maybe it's the 4x6, but he wants the 5x7, right? Or maybe it was.
well, I'm just trying to understand what we're trying to do.
We're
Well,
trying.
Originally, 30
Correct.
tax, right?
Correct.
Okay, 10 tax, he is.
He's attempting to return it, but we convinced him that the paper's
do
still
a
good.
10% discount on
To
the
do.
10
Correct.
Instead of a refund on, okay.
Correct.
Just
Correct.
to understand what we're, okay.
So yeah,
Okay,
this
so
is going to
not
be an allowance.
glossy, okay.
Mm-hmm.
It's off of the original order,
Correct.
original invoice. Okay.
Correct. So and then this, yes, it will come off of the original invoice because he already paid this invoice. We're gonna have to refund him or apply it for a future credit. But this is exactly how you do it. So what I showed you earlier, right, where we took the 10% discount. In this case, you actually have to go in and be able to apply it directly into it by making sure that he's returning the 10, but he's not really returning the 10. He's only gonna get a credit for the $12.36.
Okay, now I understand what we're doing.
Okay, so this is part of the section where we did the returns and allowances.
Okay.
This is
Well,
the
it's
allowance
that-
part.
it's that credit number is what got me all confused because I thought it's a whole new, different transaction because the number is different. 3948C2. But really, we're still working on the invoice 3947.
Yeah, so he came back to us and was like, well, wait, you may have refunded me for these 10 things, but for this one, I don't like this one. And because he's already returned from the same invoice, it's like customer service, right? Oh, you're making a second return on the same receipt. So unfortunately, sorry, we can't allow that. Instead, we can generously offer you a 10% discount. Because it's true, right? If someone bought a bunch of stuff from you and they're coming in and they're trying to attempt to return like multiple things off the same receipt, wouldn't you be suspicious about that? So in this
Well,
case,
I just thought the credit number is like a reference to whatever transaction we're trying to adjust for.
Correct.
You know, so when the reference number or the credit number is different,
Hmm.
I'm thinking it's not related to all those things that we're trying to do from invoice 3947.
Right. He.
So, I mean, that's just what got me confused, is that I thought we're on a different, totally different thing because the reference number is different.
Oh
The
no,
credit number is different.
no. I'm
And
just.
even in the book, it's,
Hmm.
you know, 3947C,
Hmm.
but it still has the 3947.
Right. So this is so for good accounting purposes, what you're doing here is you want to make sure that every credit memo, you want to attach it to the invoice that is originally placed. Because if you don't, you can get a little confused and get a little messy and start, like for example, we if you look at Bob Mason, he's got 5, 6, 7 invoices that he's owed to us, right?
Right.
How is your method to keep track of that?
Okay, well, that's my point though.
Yeah.
Okay, credit number is, we have on the screen,
Mm-hmm.
3948, which is not related to
Oh,
the invoice, the invoice
3947.
that we were.
Oh,
Yeah.
okay, my
Right.
bad. That was my bad. That could have been a
That's all I'm
typo.
saying. That's what confused me, is that, that's why I was asking, well, are we on a different packs of paper, or, you know, are we going back? But now, I get it now. I mean, it's just that part, because of the credit number was different, I
Uh-huh.
thought we were onto a different invoice.
No. That's my bad. I think I made a typo there.
Oh, okay, all right. Thank
Yeah.
you.
Yeah. So this is just me showing you that you can do a refund, but you can also do an allowance as well. It's generally the same exact way. You're still gonna fill out a credit memo. However, you're going to apply the discount a little differently. Instead of actually creating a separate discount for it, you're going to just apply it directly onto the items that he's attempting to return. And in this case, he's attempting to return 10 items, right? In the previous one, he already returned 10 items for full refund. This one, he's attempting to return 10 more, but we're like, whoa. Okay, we understand this is the wrong one, but we convinced Mr. Bob Mason, hey, you know what? Since you've already bought it from us 2018, we're being generous enough to refund it for you. But you know what? We can't accept another refund from the same exact invoice. So what I can offer you is, because he's such a good customer of ours, I'm going to give you a generous 10% discount because, we still want your service. We still want you to be our customer, and we still want you to be satisfied. So in this case, we're kind of like, the whole purpose of us making a sale is to make sure that our items stay sold.
Right.
We don't want to be giving free access to return anytime, whenever you want, because then ultimately your company will go broke. And no one wants to buy used or unopened items. So you have to think about it in that standpoint too. So
where-
yeah, go ahead.
Go ahead. I was gonna say, on here, since this is a returns and allowances, or a discount.
It,
So discount.
it's not a discount.
Oh, I thought we said we are giving them the 10% discount.
Okay, let's take it back 10 weeks ago. We learned about this. If this isn't a normal discount, this isn't a store-wide discount, this isn't terms of a discounted item that we offered this person. This is us giving them a generous personal one-on-one discount. But we call that as an allowance.
Oh, right, that's right. This is considered an allowance.
Correct.
Right.
So then in the memo, should we
Yeah.
write allowance?
Rather than,
10%
that's what I
off?
was trying to determine, because this is a credit memo that we gave them before, and we're in the credit memo, and I know that you have to go through that to do an allowance. So do we need to indicate that this is an allowance, so, just so it's clear that this one is an allowance, and he's not actually getting a credit?
not above 10% off
Right.
everything.
Right.
In the memo,
In the memo, you can disclose that. And I did right here 10%, or was it discounted? 10, ooh, I put $10. 10% off. Okay, whatever you want to write in your memo is whatever you want to make sense of it. Now, yes, I could be off of a photo paper allowance. Okay,
Okay, yeah.
all right.
okay, so basically we did two adjustments on that invoice.
Yes.
The C1 was to refund 10 tax,
Uh-huh.
a total refund,
Okay.
right? And then the C2 refers to the 10% discount off of another 10 that he wanted to refund, but we made a deal with him.
Uh-huh.
We'll give you a discount instead of a refund.
Mm-hmm.
Is that right?
Correct.
Those are the two different things that we did with the invoice?
Yes. Now, your book doesn't show you how to do an allowance. Your book only shows you how to do a return. But because in accounting we learned how to deal with returns and allowances, I want to show you and demonstrate you that you can do an allowance. It's the same exact way to apply a return.
Right.
All right.
Okay.
Those
are the two adjustments we made on that.
Correct. Because I don't.
Different things. You just showed us how to do two different things on
Correct.
that
On the same invoice. Correct.
invoice. Right.
I showed you how to do a full refund
A refund?
and an allowance.
Got it.
Okay.
Okay.
Oh, I feel like I'm like stepping on the wrong foot. But yes, no.
I'm sorry, but I'm clear now, so.
Okay. So yes. So this is exactly what I wanted to show you because in accounting we talked about having returns and allowances, right? Especially sales returns and allowances. If a customer is completely, utterly just dissatisfied with the product that you sold them, right? But you know your return policy is like, I'm sorry, dude, you missed the return period, and that customer's just about to break. I don't know, about to flip a table, whatever you want to do, right? You want to keep your customers coming back. You don't want to like completely shut them down and have them walk out of your store completely angry because you've done nothing to do. You couldn't make them satisfied, right? So this is us, making out of our own way to say, you know what, Bob, you're a great customer of us. And because you've been with us for so long, you know what, I will give you a special discount on this item, even though you missed the return policy a year ago. You know what I mean? This is us making our relationship with our customer a little better, saying, you know what, I understand that you're unhappy. I'll make you happy by giving you another discount on top of the item I sold you. Okay, so that's very common for especially for those stores that you can haggle with. And yes, so I just wanted to make sure that you understood that when you're dealing with a return, you can also do an allowance, and it's the same exact method. You're just gonna have to go through the credit memo and do the same thing, except this time instead of applying an actual discount, you're going to apply the discount directly to the amount that you are trying to refund. Okay? So, all right. Now, let's turn the page and talk about bad debt. Okay? Any other questions in regards to our I'm going to click no.
The allowance.
Yeah. Okay.
Okay, we got it.
All right. So now we're going to talk about how to write our bad debt off. So let's say we have a customer and we're going to be looking at, let me see, who are we looking at? I believe we are looking at invoice. I think it's going to be for Anderson Wedding for one of their clients. Let me see. All right. And in order to do this, right, we're going to be looking at, okay, so the book only describes one way to write bad debt, okay? And how they write bad debt is directly off of it. 100%, they're going to create a bad debt account and they're going to write off the accounts receivable as a direct bad debt expense. Now, for our class, if you guys remember what happened 10 weeks ago, what are the two methods to write off bad debt?
Direct, which we cannot do.
Which we cannot do. Good, correct.
That's IRS
Correct.
only.
Correct.
And then the other one is to, how do I say it? Not write off, not directly write off. We gotta go through.
Yes, we're going to create the allowance for doubtful accounts, right? The allowance method. Your book here shows you how to do the direct write-off method. Okay? But in this case, we're using QuickBooks, right? But are you the tax accountant or are you just a regular financial accountant?
Not the
I
tax
think we're
count.
just regular, right?
Regular.
You guys are a regular accountant, correct?
Right.
So for the sake of this, because your book shows you how to do the direct write-off method, because you are certifying for this book, I'm going to show you both ways, okay? So I'm going to show you what the book says, which is to do the direct write-off. But for future, right, when you move forward and you use QuickBooks for your own company, you need to use the allowance method. Yes. Now, the reason why the book tells you that it shows you to do the direct write-off method is because QuickBooks, right? It's actually, this program is actually tailored for a tax accountant to easily pull up the information to file taxes, right? That's why TurboTax is an affiliation of QuickBooks, right? The Intuit created those little softwares because the purpose of QuickBooks itself is so that you can file your taxes much easier. Okay? All right? Does that make sense? Understand? So, but we're not the tax accountant. We're just learning QuickBooks to just build our own company, right? We're not going to, for now, we're not going to use it for tax purposes. We're using it for regular business purposes. But I'm going to go ahead and show you both so you are aware and familiar as you move forth, okay? So the first thing I'm going to show you is going to be the direct write-off method, which means you're going to write off bad debt directly as bad debt expense. So the first thing you got to do is we got to make sure that we even have a bad debt expense account in the beginning and that we have an item, okay, with that bad debt item code, okay? And while we do that, I'm also going to let's just do one at a time. Okay, so I'm going to go to my chart of accounts just to make sure I have a bad debt expense account. So bad debt. And right here I do have a bad debt expense account. You can see it is an expense right here, right? And it's bad debt. Okay, good. So the book tells you to do this first. Okay, so now that we have the account already in here, now we're going to create an item using bad debt. All right, so I'm going to go ahead and go to item and I'm going to click new. All right, so what kind of type is this that they want us to create? what type of an account, what type of an item are we creating for this bad debt expense, for this bad debt item?
Well, we know it's a non-taxed item.
All right. You guys have your book on you?
Yes,
Yeah.
All right. Read me what it says after, oopsies. Read me what it says after writing off the bad debt on
It says use
page.
a credit, well, it says to properly write off the bad debt, it says use a credit memo and bad debt item, as shown in the following practice.
So, what page are you on? Are you page 79?
This is page 79,
All right. Keep
Oh, I'm on
reading.
80. Okay, hang
Keep
on.
reading.
Let me go back.
What does step 3 say?
Step 3
It
says
says create other charge,
Mhm.
but it's called bad debt. Okay, link the bad debt item to the bad debts expense account.
Correct. All right.
Okay.
So right now, here I'm creating a bad debt item, right? What type am I gonna have it as?
Non-inventory part? No, other charge.
Other charges, yes. I was like, you just read it. Other charges, yes.
Other charge.
All right, and we're gonna name this as bad debt. So this is a bad debt item. Oopsies, bad debt. Okay. Now it's gonna ask you, do you need a description? Sure. To write off bad uncollectible debt. Okay. And then the next thing is gonna say here, what percentage is it? We're gonna leave that blank. But what account are we gonna associate that with?
bad debt expense.
Bad debt expense account. Good. All right. And then we could go ahead and click. Wait. Let's see. Is it going to be? Let's see what it says. Do we need to expand it? No. Right here. Perfect. Bad debt. Okay. We're done. We verified with the window. We can go ahead and click next. Oh, what in the world? Okay. So here I have my bad debt item right here. Okay. Now, what invoice is it going to ask me to write off this time?
I think it's 4003.
All right. Who is the vendor? I mean, who is the customer that that we're writing the customer?
Also in wedding planners.
Anderson Wedding Planners for which one? Kumar and Sati.
Kumar,
Okay.
Sati, and Naveen.
Perfect. And it was invoice number 4003, correct?
Right.
All right. Double click that. Okay, here you go. Here's the invoice item for a total of $190 even. All right. What do we do next? It says we're gonna, in order to write the bad debt, we're going to go to our returns or refunds and credits, right?
Okay, we have to apply credit,
Uh-huh.
apply the bad credit to an open invoice.
Okay.
What does that mean? Okay, click.
All right, but first we gotta create the credit memo first, right?
Right, we can't
All right.
do that yet.
Okay. So
I
how do you?
gotta go back. No.
Okay. So how do you create a credit memo?
Okay. Up there was this refund credit.
Okay, good. So now that we know this for our Anderson wedding, right here, boom, It's already filled in for us because we're applying to this
Yeah.
exact one. Right here, okay, hold on. What was this?
Click.
It's supposed to be 4003 C. Okay. Dates, I'm going to leave the date as February 15. All right. So, now that we have this credit memo, right? It's for $190. Now, what we do is we're going to have to change this item right here, and we're going to put a bad debt item. Oop. No. Okay, so I'm going to clear this.
So we're overriding that
Uh-huh.
item.
Yep, we're going to overwrite the item. All right, and we're going to make it a bad debt. Now it says this item is associated with an expense, and we're going to say do not display message, and we're going to click OK because we know this is going to be an expense, right? We know we're trying to get rid of this. All right, so here we want to make sure it's for the full amount of what was it, 95 here for 190.
I think it's 190.
Yep, for 190. Okay, and here I'm going to go ahead and make sure I write. So this is a 2-hour indoor photo session with Satis. Okay, oop. So we want to make sure that we say bad debt write off for for the photo session.
How come it added the tax in there? I thought it was a non-taxable item.
You're right. It is supposed to be a non-taxable item. I think that's what I forgot to switch out because it's a service. Okay, but in our case, because it's a service, we don't tax it out. So here, we're just going to make sure that we charge it like that. There should be no tax, so for the full amount of $190. Okay. But if there is tax, remember, if it's like an actual item, that product that we sell, then you need to change it back to tax because you want to make sure that you include the tax in there in order to wipe out the whole thing.
Right.
Right? Okay. So because it was a service, I'm going to get rid of it. Boom. Service. All right. For $190. And it's right here. I already wrote right here. 4003C. And I'm going to go ahead and click next. Save and close. Now I'm going to get this window again. And this time we're going to apply it to an invoice. And I'm going to click OK. When I do that, it's going to automatically associate to this invoice right here for 4003 for 190, and we're going to apply it right now. And we're going to click, we're going to make sure that it's check mark, and we're going to click OK. Done. All right, now the invoice, here it is again, the invoice, right? We have the invoice that shows right here for the indoor photo session for 190, correct? But down here, you're going to notice this right here. You have the total of 190. However, you have this little tiny thing that says payments applied, right? And we have the credit right here applied for 190. So this is zeroed out. Okay?
Yeah, and also at the top where it says invoice, right underneath invoice, it says paid.
Yep.
So
Mm-hmm.
when we write it off, it's
Mhm.
considered paid.
Yes.
That's the only way I guess you can zero it out.
Correct. This is the only way we can zero it out. But however, because we created that bad debt expense, let's go check out that account right now. Okay? So, boom.
That's been increased.
Yes, your bad debts account has been increased, right? So here, I'm going to go ahead and type in bad debt. Okay. And if I were to do a quick report on it, and I go to view all dates and all times, since this is back in 2019. I'm going to click all, and here I have a credit memo that's right here for 4003C, and it is for the 190. Okay, so that's how.
This is the direct method.
This is the direct write-off method, correct?
Okay.
All right. So it's kind of straightforward. It's not really, I guess, looking at really differently, because you are utilizing the credit memo. You're using the refund/credits. But this time, instead of applying it to an actual item, you're going to apply it to the bad debt item. And it's going to transfer that amount to the bad debt expense instead of actually reversing the transaction. Okay, so now I'm going to show you how to do the allowance for doubtful accounts method, right? The allowance method. So here, again, we need to make sure that we have an allowance for doubtful accounts account. And in this case, I can guarantee you we don't have one, because they taught you how to do the direct write-off method. So what I'm going to do here is I'm going to go ahead and create a new account. All right, and then it's going to ask me, is it an income or is it an expense? Is it a bank account, a loan? What is this? And in this one, I'm going to do, it's in the other account type. And I'm going to do other expense. Actually, I think it was other asset. Because remember, allowance for doubtful accounts. What kind of account type is the allowance for doubtful accounts?
It's an asset.
It's a contra asset account, correct?
Contract.
Exactly, right? It's supposed to decrease our value of our accounts receivable. And in this case, I am going to associate that as an other asset, right? It's not technically an accounts receivable because it doesn't go, it's not going to affect it. But because the way QuickBooks understands this type of account, you're going to associate it as another asset, as other assets, okay? And we're going to go ahead and click continue. Now, I think my computer's freaking out. Now it's going to ask you, what account name would you like to have this associated with? And we're going to say allowance for doubtful accounts. Okay? And is it a sub account? No, it's not. Okay? And this, what I'm going to do is allowance for bad debt. Okay? Or you can also write to decrease accounts receivable for bad debt. Whatever you want to call it. In this case, that's what I want to associate my allowance for doubtful accounts for. Okay? And then I'm going to go ahead and click Save and Close. So now what's going to pop up under my other assets is going to be my allowance for doubtful accounts. Oh, I forgot to give it an account number. So I'm going to double click it to edit the information. Oops. Not double click. I'm going to right click it and edit this account. And let me see what number has not been used yet. So I'm going to make it edit account. I'm going to make this account number 19,000. Okay, so now here it is, 19,000 allowance for doubtful accounts right there. Boom. Okay, now that we ensured one thing is true, we have an account. Okay, now we got to do what we did last time, is now we have to create an item. And it's going to be the same way that you created your bad debt item, right? It's going to be for other charges. But this time, it's going to be allowance for doubtful accounts. Okay, allowance for doubtful accounts. And again, we're going to be looking at here. Is it off of base of a percentage? No, we're just going to leave that. Is it taxable? It depends on the item. Is it taxable? If it's a service, then no, obviously you can change that. But I'm going to leave it like that because you could potentially have items that are taxed. An account that we're going to be using is obviously our new account that we created, allowance for doubtful accounts. And I'm going to go ahead and click OK. Now, I'm going to go ahead and I'm going to create a transaction for Mr. For a customer, a random customer. Okay, so I'm going to go ahead and I'm going to pick on Mr. Tim Fang. Okay, I'm going to go ahead and create a fictitious thing that he bought from us. Okay, so I'm going to go ahead and go to manage transactions, and I'm going to go ahead and invoice him. And I'm going to say he bought an indoor photo session. Just the same exact one, okay? I'm just going to create. And how many did he purchase? I'm going to say he purchased 3. And this time, I need to change my invoice number. I'm going to make it 1506, all right? Just a random number. And I'm going to say he did it in February, again, 2019, all right? Now I have everything here. Of course, services are never taxed. But you know what? I'm going to go ahead and throw in, I'm going to go ahead and, actually, no. Yeah, I'm going to go ahead and throw in a metal picture frame. Or I can do, frame. Okay, because this one's going to be taxed. And I'm going to say he purchased 1. All right, and this item's going to be taxed, right? For
I'm sorry, you're too funny. 3 indoor photo shoots and only 1 frame. He's got a lot to choose from. You know?
Right, I know. I'm just creating
I know, but it's, I'm visualizing everything you tell me, so it's a funny picture.
All right, so here he's only getting 49 cents worth of tax, which is fine, all right, for a total of $291.48. I'm going to ignore this because that is not relevant right now. So I'm going to go ahead and save and close, okay? Now let's say Tim Fang says, I'm sorry, I cannot pay you. I'm never going to pay you. I don't want to pay you. Whatever you want to say. I'm going to go ahead and double click that invoice and I'm going to look at what happened. It's already past due. That's fine. I'm going to go ahead and apply a credit for him because he decided to tell me, hey, I'm not going to pay you. Okay, fine. So now that we have here, we need to change our invoice to 1506C, right? And I'm going to apply this, maybe I'm going to make this a later date so that it makes sense why. I'm going to say this is 2 weeks later, and he decides to not pay us on February 28th, okay? And because I am going to associate that he's not going to pay, what I'm going to do is I'm going to grab my grand total. So my grand total is $291.48, okay? I'm going to replace this with now allowance for doubtful accounts, okay? And I could add them all together in one, or I can do separate depending on that. But in this case, I don't need to have 2 line items. I already know that it's for was it $291.70? And I pressed the enter again. I just pressed the enter again.
I forgot.
I did too.
Okay, well, let me go back. So it is for $291.48. All right, I have to go back because I pressed the enter button again. So I need to fix that. So I gotta go back to my credit memo. All right, here's my credit memo, my bad allowance for doubtful accounts. So it is for the total for 291.48. And again, you don't need to have specifics here. You don't need to have 3. It could be just 1. And is it taxed? We gotta say no, it's not taxed. So service, okay. For what the heck? What was it for? 291.48. Okay, we got one of those, one of those, one of those. Okay, so this credit memo is now for 291.48. In my little memo here, I'm gonna say, write off bad debt. Okay. And then I'll be able to click save and close. Make sure that the date's correct. Make sure that this item is for.
How does QuickBooks determine what part of that is tax? To take off to adjust for the tax payable or tax expense or tax liability, whatever account that is. I mean, shouldn't we like itemize that so QuickBooks know where to adjust, what accounts to adjust? Because that 291.48 part of that is tax, right? $5 something.
Yes, it is tax. However, did this client pay yet?
Oh, no, it's a doubtful account.
Exactly.
So we
Okay.
still could get money.
Yeah. But in our sense, he hasn't even paid yet. So therefore, us writing off everything, meaning there could be a potential he could pay into tax, but at this rate, QuickBooks acknowledge that we have a total amount, but we didn't collect the tax from him yet. So
Okay,
we're
but
just trying
is
to
it-
write off
but
the
is
whole
it-
thing.
But is it under the account, tax payable? Sales tax payable, has it already been added, increase that account when we first sold it?
Well, we're just invoicing him. Remember, how do you recognize a revenue or an expense? I see what you're trying to say. I see what
Yeah,
you're trying to
I thought
say.
we invoiced them already and, so
And the tax was
different.
there, right.
Yeah, and the different accounts have been assigned to. So, okay, well, it's just a thought process, I'm not sure, maybe we should separate it because didn't we already account for the amount of tax to be added to our tax payable?
Yes
Didn't that
and
automatically happen?
yes and no. Reason being is because again, it's associated with the tax, but did he pay it? Did he pay this invoice at all? Do we have tax to collect to give?
No, we don't.
No.
No, but, so that,
But we did still affect
I'm
our
we on
tax payable, though. Is that what you're saying, Ali? Because
yeah,
it's under, right, because we have that,
when we built him,
we've
didn't we
increased the
already,
tax payable.
right, payable, not collected
Right.
yet.
Yeah, but the payable.
Okay,
So
so
with this, it's not being reduced at all. I mean, we're not wiping the tax payable part out.
Yeah, well,
$5.99.
if we put the whole figure in there, I just don't know how QuickBooks would know to adjust the payable, the tax
Right, for
payable.
the tax payable, right.
That's all I'm questioning is, how does it know to to zero that out or to take that out of the tax payable?
And how would that come out?
We're
Would that
getting
just
rid
sit
of
there?
this, yeah. How does it know that we're not going to be collecting for that? Or, we're doubtfully collecting for that?
Right, exactly.
Okay, I see what you're saying. Okay. Now, again, when we deal with accounts receivable, right? Because we never got to look at an example of a real life action happening when someone doesn't owe you. Now, again, when someone makes a purchases, right? Yes, you have everything increased, right? You have, but the thing is, he didn't pay you. So it's potentially in sitting in, okay, I see what you mean. Because when you in order for you to calculate his in total accounts receivable, you have to do separate accounts for the item and a separate account for the sales tax
Right.
that is included.
Right. And when we did that, QuickBooks worked behind the scenes, like you said, and, uh, and designated those, separated items to their appropriate accounts.
Okay.
You know, with the sales tax payable. So then when we go to write this off,
Mm-hmm.
how does it know to take that $5, whatever, off of the payable? I mean, we know they haven't paid, that's why we're doing this, but tax payable is also items that haven't been paid yet.
Increasing, we're not decreasing it. I mean, how do you decrease it if it's
Yeah,
just
if
fall
we
under
don't-
allowance
yes.
deductible accounts?
Right, okay, so my question is clear.
All right. Let me. Okay. All right. All right. All right. All right. No, no, no. I got you. Okay. So for this special occasion, okay, when we do our when we make a sale, correct? What do we know about sales? Sales is finite. Sales is stays constant because the assumption that no matter whether your business is potentially going to fault, you need to continue doing business as usual, right?
Okay, that's a gap thing, yeah.
Okay. So once a sale has occurred, that's it. You can't go back into it. Now I see what you're saying is because this person fault on their payment, therefore, who's paying for the tax?
Right.
And in this case,
Yeah, if we don't adjust for it, we're going to
Right.
end up,
It's gonna
owing.
at $5.99 would stay on the accounts payable. I mean, the sales tax payable.
the sales tax is only 49 cents. The item that we sold was $5.99.
Okay, but that's,
49 cents, yeah,
the
50
figures
cents.
could be different,
Uh-huh.
but
Now
the
I
principle is the same.
I see what
Why
you're
should
saying.
we pay for the 49 cents when we didn't collect it? We're not going to, most likely not going to collect it, the sale never, completed.
Correct. Correct. And in order to okay, so I'm trying to think of applying accounting to this. Now, you would probably most likely have to make an adjustment entry for this. But for instance, if you are providing an item and that does do sales tax, right? Same thing with a refund. You would generally refund the sales tax, right? Because it's not your money. It's money that people give to you to give to the government. Now, this also applies to when you're writing off bad debt expense. However, the concept here is yes, the sale has been done, right? The sale has been recorded. We're pending on the payment. Now, the minute we receive the payment, then yes, we can go ahead and validate that we've collected the sales tax on top of that. But you're right. In order to record the item, right, you're going to automatically bill them with the sales tax included. So,
Which we did,
mhm. Yes, go ahead, Mr.
Lee-
Sanchez.
Lee,
Yes.
yes.
This is Robert. Okay. Let me see here. Let me go up to Lynn's. Okay. Right now, you're issuing a credit memo because he's returning some things, correct, or whatever? Correct?
We're writing a bad
We're
debt
writing
off.
it off because he's not, most
Right.
likely not going
Right.
to pay it.
Yeah. On your tax, right there on the credit memo, it says tax and the first line has a service.
Mm-hmm.
So depending how you set up the service, um, what do you want to call it? Depending on how you set up the service aspect of your taxes, it will refund the tax. But the service usually isn't taxable, so it's not going to refund any tax there. The second line there, you have it set up as a tax.
Mm-hmm.
And
The second one was a taxable item, yes.
right, and you set up down there that you're taxing them according to Santa Clara at 8.25%. So yes, QuickBooks is going to refund them that tax. So that $291.48 that you're going to credit him. That's including the appropriate tax. No tax for a service, and taxable for a tax, and you're going to deduct the tax on a taxable item. That's already set up there in QuickBooks. Yes,
Okay,
go ahead.
She-
just returned.
The
because
the question.
screen that's up right now is,
The credit memo, right?
the credit memo that we're looking on the screen right now.
Right.
It's what I was thinking that maybe that's what we should do, is separate that line one service, non-taxable, from
Right.
line two, with the from the taxable item. Originally, when we were writing this off,
Uh-huh.
we have one lump, 291.48 on line one, not separated. So my question was, should we not separate them so that QuickBooks, working behind the scenes, can adjust our tax payable account?
But no, because right now it is adjusting your tax payable, because it's crediting him the tax that you were going to charge him for. So now
Okay,
you're giving him back.
yeah.
Now you're giving him back. Now you're giving him back the 49 cents. You're giving him back, and you're deducting it from your tax payable.
Okay, that's how it's looking now, or before,
Mhm.
it was not separated. Before.
Okay.
Yes.
It just had on line one, on line one, it just has the total, 291.48. Now
Right.
it's clear that there's a tax
Yeah.
amount included in that, and now I can see how QuickBooks can adjust the tax,
Yeah.
tax payable. So that was my original question when we had
Right.
one total figure, my question was, how does QuickBooks know to adjust for the sales
Right.
tax payable? So
Right.
this
Right.
credit memo can, okay, go ahead.
Yeah, you were correct. Yeah. You need to separate what's taxable and what's not taxable.
Okay, that was my question. Do we do
Yeah.
that?
So
QuickBooks would know
Yeah,
how to adjust.
you-
Okay.
right, you need to do that to know how to deduct from your payable, and how to reduce your
Right,
receivable.
if we're writing it off, the whole
Okay.
thing has.
Yes, Mr. Sanchez. I hope you know that we're in a credit memo, but right now I'm teaching them how to do the allowance method to write off the bad debt.
Right.
This person hasn't paid us at all.
No. And you don't owe, so you don't owe the taxes.
Exactly.
So they paid you for the taxes.
Exactly. That's what I
right.
was telling her, because this person
Right.
never gave us a dime. So we don't owe
Right.
the sales tax payable at all.
Right. So
Okay.
on your original invoice, you charged for sales tax, and QuickBooks was going to charge you for the sales tax. They're going to put you as your sales tax payable. But now it's deducting it. It's deducting from your sales tax payable. So you're not obligated for it. You're not responsible for it.
Right.
Right.
This is good.
So that's why we're at the point where we're kind of discussing right now that it doesn't matter whether you do one line or you do separate, because it's going, you first off, you don't have sales tax to pay to begin with because you never received the money. Her question was that the question was, because we've already charged the sales tax, how does QuickBooks know how to take it out? But in this case, we never got paid.
No, out of the payable, the amount that we have not received, it's
It was
just the payable.
recorded, yeah, it was
Not-
recorded on the payable.
So Lee is saying because we sent out the invoice with the appropriate taxable items, she's saying we've already increased our sales tax payable.
On that account, yeah, the sales tax payable was increased when we, created that invoice, right?
But I said we never got paid. So the sales tax would not be affected until the payment was received.
I mean, we're not making a refund or anything because we never received any payment. But when we created that invoice, we created an increase in our tax payable, which needs to be adjusted if we're writing this off, right? I mean, we're not talking about any real money to be refunded to anyone.
Just to
We're
get it
talking
off our
about
books.
Payable, yeah, the payable amount,
Yeah, right,
we can't just leave it in there in that account,
So-
in the sales tax
right.
payable account.
So this credit memo will deduct it from your receivables and we deduct it from your, sales tax payable.
Okay, yeah, this memo, credit memo makes sense. I understand this. Okay, but, originally, we just had that one line, it was not separated. The tax was not separated
Right.
from the total. And that was when my question came up. Should we separate it?
Okay.
Yeah.
All right.
So, and Lynn
Yeah.
was saying, no, we don't have to separate it because we never got paid. But it has nothing to do with refund of any payment. I'm talking about a payable that has
No.
yet to be
Right.
received. So,
Right, yeah, so,
yeah, the answer to be
not-
adjusted, that payable account, we have to somehow separate it and let QuickBooks know to separate it from that account.
Now,
Right.
I have a question too. I'm wondering, I'm looking at that
Go ahead.
second line, it does have tax on there. It says,
Right.
service above it and tax. Is that how QuickBooks would know that this is a tax and so it would,
Yes, this-
reduce sales tax payable? Oh,
exactly.
In this,
Okay,
in this
that makes
credit
sense,
memo,
yeah.
it did, yeah, this
Yeah.
credit memo separated the two different items.
Right, so it would
Which
be
would-
here.
Yeah, so then QuickBooks would know to adjust for that.
Exactly.
Sales tax
Right.
payable. So this, would make sense, right? This
Yes.
credit memo would
Yeah.
make sense, okay.
Right. I'm not sure about the previous one, but yeah, this one does, because this one, again, QuickBooks doesn't know what your, it doesn't know what your, crediting.
Going,
It just knows
right, yeah.
you're just crediting them for a certain amount of money. So you gotta tell it, was tax applied to this, or was it not? And that way, QuickBooks will know, yes, all you're doing, the first line, all you're doing is refunding them $95. Second line, yeah, you're refunding them $5.99 plus the tax you
Tax.
charged me. So now QuickBooks is.
So if
now
there's-
QuickBooks-
So if the invoice that
Go ahead.
we are writing off includes some, taxable items, it should be separated.
Right.
Okay, that
Yes.
was the question, okay. All right.
Okay. All right. Since we spent so much time on this topic, it is 3:15. Okay, so I'll go ahead and let's validate this. Okay, so now I'm gonna go ahead and apply it. All right, so I'll go ahead and click save and close. All right, and it's gonna say, do you want it to say this transaction? Yes. Okay, now it's gonna ask me, do I want to apply an invoice? Yes, I do want to apply to an invoice because this person decided to not pay me at all. So if I go ahead and click done, the invoice will show up. Oh, and it didn't. The invoice would show up like this, and it's going to tell me that I have credited my memo for all of this. and it is for the full $291.48. All right. Okay, so let's go ahead and take a quick break here, and please be back no later than 3:30 because we still got a lot to catch up as far as this. Okay, we still got to do customer statements and looking at the other things, but those are the two ways of how you can write bad